Hi everybody, this is Scott Miller with River City Mortgage and Financial, and thanks for watching this week's Market Minute, the week of April 27, 2009. Remember, this is intended for real estate professionals and for trusted financial services providers. If you are a consumer receiving one of these, this update, it's because someone from that community felt that you would benefit from this information. They forwarded this link on to you. So please make sure to remember them as you refer your friends, family, and work associates to them. Trusted advisors that are referred are always taken a lot better than just cold calling. This is not an intention to lock in an interest rate. It's not a rate lock quote, and it is not a solicitation for interest rate lock. So there's all the legal stuff out of the way. Heck of a week we had last week. The economic data that came out the end of last week was stronger than anticipated, so we saw the bonds kind of fall off a little bit and interest rates ticked up just slightly at the end of last week. Today, as we talk, the bonds are up, doing well. There's a lot of pressures, a lot of attention paid for Monday, Tuesday, Wednesday. We have a 2, 5, and 7-year Treasury auction, and we're going to see how that's going. Right now, there's a lot of people, believe it or not, as springtime changes season, we kind of have the cold and flu season, and all of a sudden now the swine flu is actually going to impact our financial markets most likely, because a lot of people are hotels, travel, airlines, different things. Some of the traders are dumping those stocks because of the fear of the swine flu. So a lot of people are maybe going to restrict or limit their travel. And as a result, some of those that security that money will be running to could be the bonds. So if the bond treasury auctions go well and the 2, 5, and 7-year treasury auction, look for rates to improve. The bond market is doing well as we speak, so we'll wait and see really how that unfolds. Really right now, pay a lot of attention if you're floating. Pay a lot of attention to what the Dow is doing. Typically, not always, but typically, mortgage rates will follow the Dow. If the Dow goes up, rates are going up. If the Dow comes down, typically the rates are coming down. So as of right now, I would cautiously float, and I would do that day to day. I wouldn't try to gamble. It's very hard to say float when the rates are in the upper fours. It's really hard to get greedy on that one. But I think for today, with the rates improving a little bit, I would still wait. The Treasury auctions going on as we speak, Eastern time, 1:30 Eastern time. So that's what I would do. If I obviously want to be your lender, please feel free to call me at 763-509-7400. My email is smiller@rcmortgage.com. But have a discussion with your lender to find out what's specific for you, what's the impact of a change in the rate, and how it's going to either benefit or hurt. I think you're really looking at improving maybe 1/8%, but over a period of time. Remember, the average life of a loan is about 5 years. So over a 5-year period, that still adds up to some real money. So take a look at that, but make sure you know what you're doing when it comes to the gamble part of interest rates. Thanks very much, and make it a great week.